Hi there, this is the story of LYFT, a company requested by a Titan member who has access to my portfolio. Right now, the market cap is about 7.5 billion and the price $18 per share. The most important question is whether this company is a great buy at the current price. And the answer, you will find it in this box. During this video, open the box and you will find the answer. Now, to understand this company, you have to look at what they do, how they make money, and how much they can grow. So if you look at revenue over the last 3 years and the first half of 2025, you see a nice increase for the last 3 years from 4.1 billion to 4.4 billion and then to 5.7 billion. And for the first half, they delivered 3 billion. So the growth rate is a good one, not quite high, but a good one. Now, when you look at their earnings, huge losses in 2022, another loss in 23, and 24 they succeed to report a profit of 22 million. And for the first half of 25, a profit of 42 million. Now, here you have to be aware about their earnings because they aren't the real earnings. Operating earnings were with minus. And if you wonder how did they make this money, it's because if you look at their balance sheet, cash plus investments, they have 3.5 billion. And debt, 500 million. So 3 billion net cash plus investments. And on that cash, they get interest, which is reported in their earnings. And that's why they reported a profit. By the way, surprise, their free cash flow has increased to 400 million. And this is quite nice. If they can maintain this free cash flow above 400 million, then the market cap at the current level will deliver you a good return. Not high, not great, but a good one. Average. If you are pleased with that, you may rely or you may try to invest in this company LYFT. Now, here is the thing. Understand how they make money. I mean, you already know that, but also look at the market share, and where they operate. They offer, 93% of the revenue comes from ride-sharing services. Where they connect, they have a platform, app, connects drivers and riders, and they collect a fee from the drivers. Every time a rider asks for a driver, they collect a fee. Plus, they also offer some subscription for riders, rider subscription, ads from third parties, but most of their money comes from their fees. And of course, 7% of the revenue comes from rental, bikes, scooters, and others. So as you can see, most of their money is from ride sharing. Now, also ads is an important sub-segment because here they have high profit margins, pure profits, and also those subscription. Now, here is the thing. They operate in the US and Canada, and they more recently acquired a company this year, 2025, FreeNow, which has been integrated in their app LYFT, and they also operate in Europe. Now, you have to ask about who are their competitors. In North America, especially the US and Canada, their main competitor, there are two main companies, Uber and LYFT, where Uber has between 70 and 75% of market share, and LYFT between 25 and 30% of the market share. In Europe, here, if you go deeper into this market, you will see that LYFT has a market share about 10%, and there are more competitors. For instance, Bolt. Now, next question. How much can LYFT grow in the future? Well, to do that, you have to look at the total addressable market for this year, for instance. US, 40 billion, Canada, 5 billion, Europe, 20 billion. So total addressable market, 55 billion. And this total addressable market is expected to grow by 7% for the US, 3% for Canada, Europe, 3.5%. So the growth rate isn't that high. I mean, to have 20% on something like that. Now, if you find out that those markets will grow more, you'll have a growth rate over 20%, then let me know in the comments. Maybe you have more insights than me. Now, if we calculate the revenue for LYFT based on their market share in Canada and the US and Europe, you will see that the total revenue from the US 6 billion, Canada 1 billion, Europe 2 billion. Here they have to keep continuing to integrate their platform free now. So total 9 billion in revenue. Only if they can maintain their market share about 10% in Europe. And of course in the other markets. 9 billion. 9 billion you can get in revenue for this company. So as they made 3 billion in 2025 for the first half, the other half another, maybe 3 or 4 billion, you'll report for 25, 6, 7 billion. So close to 9 billion as they may expand into Europe. Now, this market, total addressable market, this revenue they get from this TAM is expected to grow by how much? 7% US, 3% Canada, and 3.5% in Europe. So on average between around 5%, right? This revenue of 9 billion, for sure they will reach 9 billion in revenue, will continue to grow by 5%. Is this enough for LYFT? At the current valuation, compare possible revenue, is likely to happen 9 billion revenue with the current market cap 7.5 billion, say yes, is undervalued. And the growth rate only by 5%. Now, if you look at Uber, they are making over 40 billion in revenue, right? And if you look at their past history, when they had 9 billion in revenue, they weren't able to deliver a profit. Then you have to ask yourself if LYFT can make a profit with 9 billion in revenue. Because if they don't, that will be bad for shareholders. Because you look at the number of shares, it has increased over the years. And if they continue to report some losses in the future, shareholders will cover those losses. So here is quite tricky. The downside is a 9 billion. It's quite hard to make a profit. Maybe they'll be able. They have a chance. There's no doubt. But if you compare LYFT with Uber, when Uber had 9 billion, Uber wasn't able to make a profit. And I don't know if LYFT can do that. Quite interesting to think about this. Now, there are also opportunities. LYFT can expand their market share from 25% to maybe 40%, 50% in each market. Compete directly with Uber. They can also do that, but if they start competing more aggressively, they're likely to lower those fees for drivers. And if they lower their fees, they will make less money in revenue. This means low margins or more losses in the future. And here is quite tricky. Now, if the market stabilizes, and let's say LYFT may have 10% net margins, yes, at the current valuation, you might get a return between 5 and 7% a year. Don't think you'll have 10x in this company. Don't do that. And of course, you can also add the cash, but I wouldn't rely on that. 3 billion net cash plus investments. So the market cap can reach 10 billion and still have a return like this, 5-7%, if you take into account their cash. Now, you also have to think about the other competitors that may arise in the future. For instance, robo taxi. This is a major risk from especially Tesla here. You have Tesla, Waymo from Google, and Zoox from Amazon. They already started to offer their services. Waymo has a longer history, and Tesla started this year. So those, for the moment, new competitors, will eat from this market share in each country, for the moment in the US. And it's quite tough for LYFT to maintain their profit margins about 10%. Maybe lower or not at all, to report a loss. So, in my view, to open the box and show you the answer, LYFT right now, for me, is not a great investment. When I look at the market, the competitors, and what's next, and the future growth, and what they can deliver, is not a great investment for me. Maybe for you it is, especially if you are pleased with average returns. But I want my return to be over 15%. 10%, over 10%, 15%. To double my money in 2-3 years. This is my goal. Not to invest in average companies, average investments. That's why, if you go to my profile, just type an investor, you can see my portfolio. And my investments are up in just 2-3 years. Double. There are still some undervalued companies there that I bought this year. And this is my aim. Double my investments quite fast. Not to invest in those average companies. Now, there are some people that really want to invest in LYFT. And if you give me $1 million and tell me, John, you're only allowed to invest in LYFT and make a profit, what price would you pay? And the answer will be available for members. And to be fair with you, for Spartan members, where the price is lower. By the way, if you join Titan, you will have access to my portfolio, great investments. You also get access to Spartan. So great value for you. See you there.